Good morning, everyone. This is Marshall Gittler bringing you the morning comment for October 16th. Well, the action yesterday was all in U.S. interest rates. It's hard to say what caused the wild gyrations because such moves are a sign of panic rather than a calibrated response to a certain input. The range on the 10-year bond yesterday was an incredible 36 basis points. The low yield only held for a moment, though, and the bond closed with the yield down only 6 basis points at 2.14%. The action in the Fed funds futures left more traces. The implied interest rate on the longer dated futures fell 18.5 basis points, or nearly one whole rate hike. While the disappointing U.S. retail sales may have triggered the move, the underlying reasons are fears that the global economy is slowing, deflation is gaining hold, and most importantly, the possibility that central banks can no longer do anything about it. The myth of central bank omnipotence is being torn down. With that, the possibility arises that the Fed will not be able to start tightening on schedule, or, even if it does, it may have to tighten at a slower pace than had been thought. My personal view is that the fears are overblown and that the dollar should come back. The FOMC makes policy very slowly, basing its moves on a wide consensus. It therefore also changes policy only very slowly. It would take a lot to dislodge its current plans. Indeed, that's what the Fed funds futures are telling us. Nonetheless, that's still quite different from other countries and other currencies where there is no discussion at all about normalizing rates. It seems to me that the policy divergence driving dollar strength still exists, although the pace of divergence may be slowed. That means the pace of dollar appreciation may be slow too, but it shouldn't mean the direction changes. As for today's indicators, given that the market is concerned about the pace of Fed tightening, the focus today will be on the speeches by 4 Fed officials, ranging from the dovish Minneapolis Fed President Coachella Cota to the hawkish Philadelphia Fed President Plosser. The centrist Atlanta Fed President Lockhart and St. Louis Fed President Bullard are also speaking. Their views may be more typical of the FOMC as a whole, and so should be watched more closely. During the European day, we get Eurozone final CPI for September, and as usual, the forecast is the same as the initial estimate. In the U.S., industrial production for September is forecast to have rebounded after declining a month earlier. The National Association of Home Builders market index for October is expected to be unchanged, while initial jobless claims are projected at the relatively low 290,000. If the data comes out as expected, I expect it would help the dollar to recover. From Canada, manufacturing sales for August are anticipated to drop, a turnaround from July. In addition to the 4 Fed officials, ECB Governing Council member Cohen will speak. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.